Good evening, everyone. This is Reed speaking from XTB. Just firstly want to say thank you for coming tonight. So tonight's trading club is going to be a bit of a speciality for us. I'm sure you've all heard it about the energy crisis. Firstly, I did want to mention kind of like the nature of the trading club. Now, of course, it's still an educational event, but the way that we kind of run it is that it's a bit more of like an open discussion as well. So if you do have any questions in the meantime, we will be doing a Q&A session towards the end. So, please do get thinking now about any questions that you want to discuss. But even actually during the session, if you ever want to kind of shout out or you have any questions, this is not kind of like your ordinary webinar. So please feel free to put in the comment section below if you have any questions, and they will be answered too. Okay, so now I want to bring it over to our market analyst, Walid Koudmani, to XTB's market analyst to session. Walid, are you there?
Yes, I'm here. Thank you very much. Let me just turn on my camera very quickly. Okay. Can you see me? Perfect.
Yeah.
Okay. Hello. Thank you, everybody. Thank you, Reed, for having me today. It's always very nice to do these sorts of events where we do interact with people. And as he said, if you have any questions, any sort of things that you might be interested in regarding the markets we talk about today or something that interests you, let us know. We'll do a Q&A section at the end, going over some charts and just explaining the whole situation. But overall, we're going to be doing probably as well a general overview of the situation with what's happening with the oil markets, the energy crisis, just a few points to give you a broad picture of the situation. And then if anybody has any more specific questions, we can, of course, get into that as well. So I'm here also, of course, with Reed. So it's always a pleasure doing events with him. I think we're a good pair. So tonight is going to be a great event, I think. So.
Yeah, there's quite a lot to talk about as well. I think I can probably speak on the behalf of everyone that I think probably from a market's point of view, the summer this year was probably one of the quietest I've probably seen in a while. So I think, within the past, month or so, we can definitely see some volatility coming back. And I think, especially with this current situation, such as like the energy crisis, which we're kind of, all glued to at the minute, is pretty much plastered all over the news. So I think it's quite nice. It's definitely kicked off a good bit of volatility, especially in some markets like natural gas, for example, which is obviously one of the top markets that we're going to be talking about tonight. So it should be interesting. So also I just want to mention, guys, as well, is that for people that have accounts with us already, if you have any questions about our products or services or even more educational events, please do keep in touch with your account manager. Obviously, the trading club is just one of the events we do. Obviously, we're quite renowned for the actual education that we do offer. So, and it's very extensive. So it's not just online-based webinars that we host. There's plenty of additional services to help with your trading. Online courses, plenty of reading materials. So if anyone out there is looking for a kind of additional support or help, please don't sit there and struggle. Get in touch with your account manager directly, and we'll see what we can do to help. With tonight's session as well, don't worry, we will be sending out the recording as well. So everyone who signed up, after we've edited the video, we just pretty much send the recording out to everyone anyway. So you will have it, on demand, so you can watch it at any given time. So you should pretty much have all information.
Yeah, absolutely. It's always, sometimes people do tend to miss certain things during the webinar when it's live. So this is very convenient. If you did miss something, of course, we're here to help in the moment. But if you did miss something later on, you can just rewatch the video and maybe catch on to the section that maybe you slipped by or you missed at that point. So we do offer the recording as with all of our other events. So again, it's a pleasure to be here, and it's very nice to have all of you here. So I think maybe we can get into a bit of an overview of what's happening. Just some major topics for the markets. What's been moving, like you said, there's been a lot of volatility in the markets lately, particularly in the energy market. So let's say oil, not gas. And they're correlated to several events. Of course, they're correlated to each other. And they are some of the things that might end up having one of the most real impacts on the consumer life, let's say. So sometimes we might hear of things that happen in stock markets or in the markets in general, and you might assume that they won't impact, the day-to-day life of consumers. But oil prices, as I'm going to show you here in a couple of slides, is how related they are to everything else in the economy is very important as well with nat gas, because obviously nat gas is also used for energy purposes, heating. So now we're entering the winter colder months where demand for nat gas traditionally rises. And we're going to be talking about a little bit of this as well, because it's very important to keep in mind demand and supply with these commodities. I think that's what makes them a little bit more interesting and easier to follow. And I think that's what attracts a lot of people as well, because they can look at the news and see what's happening and kind of in their mind understand roughly what might happen. So if there's a conflict in the Middle East, you can assume that perhaps oil prices will go up because of supply, even if you don't know the technicalities. So we're going to
one thing. Sorry to cut you off there, Walid. I was just going to kind of add to it, but I think this particular opportunity is very interesting, I think, because where we're kind of sort of seeing it on the news and also from a market's point of view, we're also seeing like the direct impact that it's having on day-to-day life as well.
Absolutely. Yes, exactly. And you don't have to even sometimes go to a financial website to see it nowadays. Even if you have a car now, you felt the impact. If you pay any sort of any energy bill for gas, you'll have felt that. And of course, for the trading club that we're doing for traders, this is the main thing because you can see it on the charts. Some key levels have been reached, so we're going to take a look at those as well. I'm just going to slide right through these just to the disclaimer. As always, when we do our webinars, we have the disclaimer. For this presentation is provided for general information and marketing purposes only. This is not investment advice. We're just here to offer educational content, really. So some top news just to go over very quickly. We had three main things really happening, or around four main things. So we had oil surging with China coal futures hit all-time high as floods cripple output just when it's needed the most. So we were seeing a lot of demand from coal now shifting to oil. And I'm going to touch on that very important point in a second here. But we're seeing a lot of other alternatives to oil become so expensive that producers are also moving back to oil. So we're seeing the drive for demand in oil increasing from all aspects, not just consumers. We had the Evergrande situation with the Chinese developer. Some of you may have heard of it, caused a huge issue in the market, some major moves a few weeks ago because there was the risk of them defaulting on their debt. However, they have also failed to make the third offshore coupon payment. Markets managed to rebound slightly. Today, we are seeing some rebounds in indices. And this week is mostly about the FOMC after the mixed NFP from last week, which was a huge event that we were following. A confirmation of a positive result from the NFP last week could have been what really sealed the deal for the next Fed decision. So markets were really scared of that because potentially changing monetary policy could then impact the available cash in the economy and then the recovery. So these are the main events. Obviously, the oil price surge and all of that is going to be affecting other sectors of the economy. So other stocks, other indices as well, because of the fact that production oftentimes relies, or if not distribution, relies on oil. And so whatever we're seeing with that might end up impacting the prices moving forward. So as I said, there's been a weak NFP report. We've seen some profit taking in markets. The energy crisis has been one of the main drivers, although we have had some Putin assurances, as they're known, because he assured Europe that he would Russia would be increasing production. As I said, the Evergrande situation has been obviously troubling markets. Tapering, which is the central bank, the Fed's decision, might be delayed now that the NFP wasn't as good as expected, but at the same time, that remains to be seen. And of course, you can see here on the chart on the right, the chart UK gas prices for November, December, and January of 21-22. So those are some of the main points. If obviously, as I said in the beginning, if anybody has any questions about anything we're talking about, feel free to ask if you have any sort of doubts. We're also going to be doing a Q&A section, a question and answer section towards the end. And of course, I'm sure Mia Reed will be able to help you out with your queries. We also have, as I said, I have a few more slides, but we can stop in the middle and talk about something that maybe we want to focus on, or we can keep going and then just switch straight to the charts. What would you recommend, Reed?
To be honest with you, I feel like we should touch base on the slides first, to be honest with you, and then it would be good to see kind of the impact on the charts, to be honest with you.
Okay.
But yeah, please do bear it in mind, guys. Obviously, we're kind of, the trading club is more of like an open discussion. So yeah, it might not be, natural gas related, for example. If you want to have an input on something else, then yeah, guys, please don't be shy and feel free to put in the comment section. or wait for the Q&A section at the end, which we'll go through. But yeah, I think we should continue with the presentations, to be honest, Walid.
That's fine. I only have a few more to go anyway, so cool. I kept it brief just at the point to illustrate what we're talking about.
Yeah,
so
I feel like this. So based on what we're saying from a news perspective, I think the charts is quite interesting, especially natural gas, for example. I mean, if you spoke to me this time last week, I was kind of very confident, I'd say, in terms of the current market situation. But I think it's took a bit of a tumble, and there's been a little bit of uncertainty, so that we've kind of sort of seen in the market. So let's get through it. I'm kind of excited to see, because I feel like the chart represents something a little bit different.
Yeah, absolutely. You're right. We're at a situation now where it's getting more and more unpredictable, I would say.
Yeah.
Seasonality tends to play a role in these in prices for gas in particular, but at the moment, because of the huge strain on supply, we are seeing some unpredictable moves happening. OPEC's decision a few weeks ago was also unpredictable because they were potentially expected to increase production even further, but we didn't see that. So that made markets panic even more. But let's just get through these last few slides, and then we can move on to the chart section. So on this Bloomberg chart on the left, you can see that gas storage utilization in Europe currently stands at only 74%, with a 5-year average of 89%. According to the EIA, if the coming winter will be harsh, then some areas may face commodity shortages. So this is what I was talking about, how it will end up affecting day-to-day life. This is currently the case in Great Britain, as we mentioned, where inventories are depleted and demand continues to increase. Gas prices in Europe and Asia are extremely high. The energy crisis can provoke reactions throughout the whole global market. Increased demand in Europe and Asia will cause a greater deficit in other markets, and higher energy prices point to the prospects of high and rising inflation, not temporary as indicated by the central banks. So that's really important, because inflation has been one of the biggest fears after the recovery, where currencies are devaluing, and at that point, with an with prices, as the currency devalues and prices increase, that is a negative situation for the economy as a whole. We have a few more charts here as well. On the left, you can see over the past months, the prices of energy commodities have increased by as much as several hundred%. This is the effect of shortages, artificially limiting supply, particularly what we saw with OPEC, and most of all, dynamically rebounding demand, which was expected to some degree, of course. The projections were that demand would recover, especially after the vaccines and after the COVID pandemic started to ease. But what we're seeing is a better than expected recovery in demand, and basically little flexibility from the supply side, where perhaps it would have been required to increase supply more to this point. But oil producers are okay with the price being driven up, even though we're going to reach a point where it becomes too difficult for actual demand to keep up.
Okay. And we have a question, Walid.
Yes, of course.
I wanted to interrupt you there because it's quite relevant with what you're saying, interestingly. So we've got a question from Hussam. So thanks for your question, Hussam. So you'd like to know, when will the shortage of oil be reflected negatively on factories such as the Dow and the DAX, for example?
Oh, excellent question. Thank you for your question. So what we are seeing is actually it's already being reflected negatively in stock markets. Of course, the higher prices go, the more uncertainty there is, especially for the future. We have received also news recently of China ordering their states to secure the energy market required, so energy supplies required, so whether it's natural gas or oil. So basically, there's going to be the same amount of supply for a while within a small increase, but demand is going to continue to increase for two reasons. One is the natural increase in demand, and two is now this fear that we are seeing of running out of supply or running out of stock or inventories. So this fear in itself, even before the actual shortage happens, is driving markets slightly lower, driving uncertainty, causing a little bit more volatility sometimes. We can see these reactions similarly to when the central banks talk. So like when the central bankers just talk, they don't even have to do take any decisions. Just them at their speeches can have an impact on the market, and that's also similarly what we're seeing right now on the Dow Jones and the DAX, but as well as several other stock markets. And it's natural because, of course, As we mentioned at the beginning, oil prices and oil in particular and nat gas has a real impact on supply, on distribution, on production. It has an impact on the actual practical, aspects of producing something that then would end up being your product at that point if you're the company.
Yeah, that's why I thought it was fairly interesting because, as during, due to COVID, for example, things haven't been exactly normal, but now we've kind of edged towards, kind of a little bit more normality in life. People are going back on holidays, et cetera, et cetera. So I think it was quite interesting for them, for what OPEC to kind of do, given the fact that we've been kind of in lockdown for, quite some time. And then as normality comes back, they're now, deciding to cut, et cetera, which it seems a bit interesting to me. So I'm not too sure what they're trying to do from a price point of view. But we do have a question from Shaf. So he asked if we can, if the charts are available to the public. Now, we're just actually going through the news aspects and kind of what we can actually see what's potentially driving the market, Shaf. So we're actually going to be going through the charts after. So if you just bear with us for, to get through these slides, we're actually going to be taking it over to XStation. We're actually going to see the impact directly that it's had on the charts.
Yeah, no, good, excellently said. So yeah, so I think for the when I'm showing you these Bloomberg charts on the screen, and sometimes you might be able to find these. So of course, if you follow the news section of the XStation or on the website, you'll have access to a lot of these sorts of charts and this sort of data, which we are able to provide with our Bloomberg terminal and our resources with that. So make sure to make the best use of the news section, because you'll be finding a lot of these sorts of charts and graphs that will show you a lot of interesting aspects of the market.
One thing that helped me, so that I'd probably recommend for you to check that out as well, Shaf, is that you can actually, so in the platform, you can customize your notifications. So you could probably filter it a little bit better to kind of only get notified based on the news that you actually want to see. So I'd definitely recommend to have a little look through, because the platform's like really customizable. So have a little look, and that's something that I've personally done. So I've tailored the filters just to get kind of the market related news that you're interested in. So to be honest with you, is the news that you get in XStation is very intuitive, and it's extremely quick, etc. I find myself finding everything inside the platform already, to be honest. So that's definitely something worth checking out.
Excellent point. Yeah, well said. I'm not going to add to that because you just summed it up basically. But yeah, so briefly going on to this, as on the right, you can see the chart showing you the correlation between the price of oil and bond yields peaked since October 2008 or 2020. Sorry, high oil prices reflect expectations of high inflation, the prospect of higher rates, and a reduction in the attractiveness of government bonds. And high energy prices increase inflation expectations, which lead to higher bond yields. This in turn has a huge impact on the dollar, gold, equities, especially technology equities. Really, it's tied into the the central bank policy and the interest rate. For that reason, if you want, we can expand on that later on. It's not too complicated, but it is a topic on its own of why these inflation expectations are such an issue, and why the fact that oil prices and energy prices are growing are pushing these inflation expectations higher and higher. But important thing to note is that the energy crisis is not just about Europe, which could have been resolved with the Russia news that we saw a few days ago. China's coal inventories levels, mines, ports, and power plants are at their lowest in years, consumption measured in days, of course. The authorities have ordered the mines to resume production, which may not, however, completely solve the problem. Supply constraints and rising energy costs are hitting many industries, including packaging and logistics, which even previously faced bottlenecks. So we're running into a double situation right now where many bottlenecks were faced during the pandemic, of course, because travel was limited in itself. Now the travel is not as limited, but the costs are so high. There's multiple bottlenecks on that end because now they're having to catch up with previous demand, and then also new demand coming in, both adding on to the need for these resources that are getting more and more expensive. And then just a few final points here. We can see Brent testing $80 per barrel zone and reaches the highest level since 2018. We even saw a break higher today and yesterday. WTI trading near recent local highs at $77 per barrel. Breaking above would put the price at the highest level since 2014. Goldman Sachs boosted its oil price forecast and now expects Brent to reach $90 by the end of the year and WTI 87. According to Goldman Sachs, oil market deficit is growing amid limited supply increase from OPEC and limited impact of Delta outbreaks on demand. So this was another factor, slightly tangent. There was this idea that there was going to be a bigger impact on demand because of winter COVID, but that doesn't seem to be the case. So they did not adjust accordingly to that either. So they were worried that if they increased supply, to answer your question from earlier, Reed, I think part of it is that they were worried. Oil producing companies or countries in particular were worried that if they increased the supply too early and then there was a pullback in demand because of some sort of whatever effect of COVID or whatever effect of lockdown or something like that, then that would then require that would drive the prices lower, and then that would require them to readjust again. So I think they wait it out, or they're trying to wait it out further, but at the same time it's really causing massive chain reactions moving forward into the economy. Moreover, oil supply was hit by one of factors like the hurricanes we had in the US. These are something to keep in mind as well. There's a high risk of oil price rallying into year's end amid spike in demand. According to Goldman Sachs forecast, oil market may begin to stabilize in the second half of the year when US shale and OPEC production adjusts. Markets expect at least some of the Venezuelan and Iranian oil may return to the markets. This is something we've talked about in the previous webinar. And daily reduction in stockpiles around the world sit at record levels. So I think that basically, so this is the final, I think, slide that I have here, which is relating to the harsh winter. So this is related more to the nat gas prices predictions. So nat gas prices tend to follow seasonality sometimes. So what happens is... Yeah, of course.
Sorry to interrupt. We had a question just before you move on. So Waldemar, thanks for your question. He would like to know when the energy shortage, if the shortage will affect currencies.
So so basically, because everything is interconnected and correlated, the energy shortage is leading, as I mentioned earlier, to higher energy prices, which lead to higher expectations of inflation, which might push the central banks to act quicker or differently than they would have. And then that movement in itself would then impact currencies, because the issue with inflation in itself, if you're not too sure about it, is basically that the value of the currency in itself is being devalued because prices are growing, and because of the fact that the costs of raw materials, the costs of commodities are ever increasing. So if the monetary policy is too accommodating in that sense of too low interest rates, money is too cheap, there's too much money in the economy, meaning that every single dollar or every single pound buys less of whatever you're trying to buy. So when a central bank then goes and adjusts its interest rate to then maybe have it a higher interest rate, so it costs more to borrow money, there's a less supply of money in the market, and then that would then ideally, or in theory, boost the currency in itself that was being devalued. So the higher energy prices then go and play into inflation expectations, which then play into the interest rates, and that is the decision that's made by central banks. So in the long run, if left unchecked, that also has an impact. So you can have infinitely expanding prices with no adjustment from the central bank, but at that point, the currency in itself, the inflation is devaluing it so much by every year that you'd end up in a situation where you couldn't buy things anymore with the currency. So in effect, it does affect that currency.
Yeah, and have we seen any currencies in particular that have been directly impacted, or not just yet?
So in particular, basically, of course. So the US dollar is actually climbing very high. We've seen it reach multi-year highs against the pound, against the euro, which are both trading lower. They're trying to recover. They're not crashing at the moment, but we saw a huge strength of the dollar in two aspects. Of course, commodities, particularly oil, are traded in dollars. So the more something is traded, the more demand for dollars there is. So that removes dollars from the market, increasing the value. That's pushing up the price. We also have these potential, signs from the Fed that they were going to start tapering that help the dollar as well, all related to the inflation as well. So we're seeing the dollar benefit sometimes from these kinds of decisions, but then obviously you could then have to go and look at all the dollar pairs, which is most pairs.
Thanks, Walid.
No, happy to answer that question. So basically relating, I think the final point here is that for nat gas moving forward into the winter, seasonality dictates or indicates usually that During colder months, demand for nat gas rises, rising prices. However, if, for example, there is better than expected weather, that might decrease, that might go higher than that. But at the moment, we see weather usually has a significant impact on only select commodity markets, but could be critical to the entire global economy. Rising energy costs amid high inflation poses a risk of stagflation. And of course, winter in the Northern Hemisphere may be decisive. Scientists talk about a weak vortex threat that would lead to a very cold January in some parts of the US, Europe, and Asia. Obviously, such a long-term perspective in the case of weather is highly unpredictable, but it's worth keeping an eye on these kinds of meteorological events. And yeah, I think that's it for the slides that we have. So we just wanted to cover a broad idea of the fundamentals happening in the oil market, the energy market, the nat gas market, and how they interrelate to each other. So we can take a look at the charts now with some price action. And of course, if anybody has any questions, please feel free to start asking questions. We can move into the real Q&A part of the event. So I'll just move here.
Yeah, no problem. So yeah, bring up X station, because we do have one question from Sam again. And he said that we're going to see volatility until the end of the oil crisis is over.
Potentially. So, if there's one thing we've learned from the pandemic is that volatility comes sometimes out of nowhere. Sometimes it could spike for a few days and then stabilize for a month. We've seen that with several assets. Of course, if I go back, this is an oil Brent. So let me take away some indicators here. So this is Brent oil on the daily chart. And you can see that, we're going back basically until the pandemic crash. Now, besides a few moves, which were up and down, you can see the direction is fairly straightforward, especially going from here. And you can see that even for months, it just trails sideways. But as you can see, sometimes on the daily chart, you have a candle that goes up, another candle that completely covers it. So like an engulfing candle, another one. So you'll have this spikes in volatility while the direction is trending in a certain way. And that's what we're seeing at the moment, where the direction is being driven up or down, where regardless because of fundamental factors. And then you get that little bit of news every once in a while, maybe every once in a week, every 2 weeks, where 2 weeks ago it was the Chinese developer situation. Then you had OPEC not increasing production. Then you have the next story. So as long as this uncertainty remains, I think uncertainty is tied to volatility, because when this is tied to whenever any macro report gets released, if something comes out and it's almost exactly like expected, even though it's positive, then sometimes the reaction on the market might not be as big as something that is completely unexpected. So the more unexpected something is, the more it can have an impact on the market. And we are seeing a lot of unexpected events happening. Last year we had obviously several different events, but this year there's also plenty of unpredictable things happening, which then do relate to volatility.
Exactly. And the thing is, there's going to be multiple factors on why we can see volatility in a particular market, right? So probably the best advice I could give Hussam is kind of use the tools and resources that XTB have to kind of keep on top of those things. So, some of our kind of top services are going to be one, obviously, is the news section that I already mentioned. Generally, you will find stuff through in there, throughout the day. But I would say we offer a really, really great service. So for people who are not familiar, so Walid actually runs his own WhatsApp group service, XTB, and it's where he pretty much sends out market-related news throughout the day. It's very in-depth. He puts a lot of work into it. So as well as providing good, relevant market information, he provides visual charting, market commentary. So it's a really good source of information. So if you're not in our WhatsApp group already, Hussam, please do contact us tomorrow about getting added in, because again, in terms of actually getting good, relevant market info, Walid, you're extremely quick, to be honest with you. So, just generally keeping on top of those things is something that you always want to do with trading, not particularly just because there's an energy crisis going on right now. There could be multiple different factors on what could be driving a particular market. And just like what Walid said, sometimes it can be expected, sometimes it can be completely out of the blue. So it can be quite hard to predict. But like I say, the resources that XTB have are extremely good. Like I say, news section and also the WhatsApp group is probably going to be your best bet to kind of, stay in touch with the market and what's going on.
Yeah, thank you very much for that, Reed. I really appreciate it. Of course, yeah, we do our best to keep you as informed and as up to date as possible between the news section, the WhatsApp, the events we run, the education section. There's so much. Of course, even if you call your account manager, like for example, if you're calling Reed or one of the other ones, they'll be more than happy to help you, and they're more than qualified to just take care of whatever needs you may have. So on that end, in fact, for that question of the volatility, I think was very important, because it's quite important to be ready for events to happen, or be ready for moves. So like you said, this is an excellent example with the WhatsApp group, where sometimes there might not actually be something fundamental happening, but because I have the charts open, I can spot maybe a level, and I won't even, it won't even be a prediction. Sometimes it's important to identify certain ranges, certain levels that might be important for you and your trading. So if we go, for example, on the hourly chart for oil, what I would put usually is a line at the very top. Maybe we can do one at the bottom if we want to do it this way. If we want to restrict the range even further, we can do it this way. So the way I would do it is, if this acts, as you can see here in the past, acted as a resistance, and then we had a slight pullback, we can either draw it here, where there's a lot of price reaction, which is very short, obviously, very small range, or we can have it further down, where there has been a more consistent, after a more consistent drop, we saw the pullback, and then we saw the test of 79.80. Psychological levels are also something to keep an eye on, round numbers, $80, $90. These levels are important to keep an eye on. And of course, all-time highs, previous highs, these are certain levels that you might want to be taking an eye on, or keeping an eye on, even during volatility. Of course, during extreme volatility, sometimes the moves are so big that they just break through levels and then pull back, or they continue going. So sometimes things are unexpected, but if you're ready with the knowledge you need, with the charts up, with the strategy that you have, then you can make the most of these kinds of events, because going into it that, hey, there's this OPEC meeting on this day. If they decide this could happen. If they don't decide this could happen, and you have a plan and strategy for that. Same with nat gas. If maybe we didn't have the idea that Russia was going to supplement supplies to Europe, which pulled the price back. Actually, let's take a look at the price or the chart of nat gas.
It's interesting.
I don't even have it. Let's see here. Let me get the price nat gas. So nat gas is a very interesting market, as you can see. Look how much volatility there is. This is even more than the oil market by far. And really, as I said, driven by unusual demand, driven by projections of shortages in supplies. So this is how we can do it. We can even draw it here maybe. But basically what we can see here is same thing though with oil. We're seeing the steady upward move and then some volatility at the top. So here at the top, we saw an upward push that pushed it to about 6.294, and then a pullback. But then you see that it didn't actually pull back below really that far below the highs that we had reached in the past. And that's the important part, because you want to keep an eye out highs and lows for potential levels as well. If you have a moving average, I have the 200 SMA, but it really is up to preference. Everybody prefers their own different indicators. They tend to help. Then we saw a second upward move and then a pullback once again. That's basically this pullback here is the Russian story, where Vladimir or Putin announced that Russia would be supplying more nat gas, to Europe to counter the shortage, which was already being dealt with. So yeah, but if anybody has any doubts or questions about anything I just talked about, or any other chart that you might be interested in, please feel free to ask. Of course, we're here to help with that as well. But yeah, you can see a lot of volatility, especially in the nat gas market. And these are things that do end up affecting your daily life. So besides the trading aspect of it, I think it's important to keep an eye out for these kinds of things, because they do end up, if you can relate them to causes, you can understand why these certain things are happening as well.
Well, personally, I mean, obviously I mentioned about the WhatsApp group that you run, right? One of the reasons why I think it's so good is because it's not automated and there's actually a man behind the surface. So like what you were saying, Willie, so when there's kind of expected volatility, people kind of do know about it, right? That's why everybody's here today. But when stuff kind of, can come out of the blue sometimes, obviously, if there's anything that you kind of spot that's relevant and is happening right now, you will make people aware about it, which is quite good. So obviously there's a lot of things that, a lot of automated services is not as, doesn't really have that personal touch, if you know what I mean. So with the WhatsApp group, obviously you're kind of there providing the alerts, right? So if anything you kind of spot, like you said, any kind of key levels, etc., it's a very kind of good service to get good information like that, I think. So that's one of the reasons why I think the WhatsApp group is very good in terms of getting like good relevant market info. So again, guys, please, if you feel like that the service might not be good for you, for real account holders, it is completely free. So we're not taking any money for this at all. So you've got nothing to lose. Please do call your account manager and ask to be added into the WhatsApp group. If you don't like it, we can always take you out. But honestly, once I get you in, I'm pretty sure a lot of people are going to be pretty glad. So
yeah, I think, thank you again. I think most people do appreciate that. And the fact that it's on, it's on a level where maybe perhaps if it's an automated service, you might receive the notification that the NFP came out or that the OPEC announced this, but maybe it might not click as to why that is relevant, what is happening, how that can affect the market, how that did affect the market. So what we try to do, or I try to do with the WhatsApp group and what we try to do with our events is always, simplify things, make correlations understood, why certain things affect other things. And for example, like a WhatsApp that I might send, on a day, for example, I might not even be reading the news. I just look at this chart right now and I can send in WhatsApp on this. Like you see how this area right now is being tested. So a level that previously acts as a support or resistance becomes certainly a little bit more significant than a level that, it doesn't act like that. So we can see here that this area around 5,000 or 5.45 acted as a resistance in the past, then a support twice or three times, and now currently is acting as a resistance. So because we don't give investment advice, we don't predict the future here, but what I can see is that now the price is once again testing a previous level that acted first as a support or first as a resistance, then as a support. So what I would do is send a message on this with this chart. Of course, maybe I'd have a few more indicators on it with this high, this low, and see, hey, the nat gas is trading at this price. This seems to be an important level because in the past the price reacted to it. What are the scenarios? And then based on that, you can kind of assess on your own decision making and assess, okay, do I see a trade here? Do I want to wait for confirmation? Do I want to wait for news? Do I want to just go with it? Do I see the price going up or do I see the price going down? So that's something that I would basically, this is a prime scenario as we're seeing live right now of what a WhatsApp would be like, because obviously we're not telling you like go short, go long, go do this, do that. We are giving you the scenario where something might happen, but it's up to you to then apply your strategy, apply your knowledge.
Absolutely. Personally, though, I think that's a lot better because you're feeding people the relevant market information. So in terms of your actual trading, guys, this is going to help you progress because like what Walid said, he's just providing you with good relevant market information. You still need to go away, analyze yourself, think about your volume size, entry, targets, cover yourself from a risk perspective. So again, in terms of actually your trading progression, it's still going to help you. We do actually have a question from Zanita. So thank you, Zanita. She would like to know, why was Putin's story reflective on the chart volatility negatively? Shouldn't it be the other way around? He reassured everyone that he could meet demand.
Excellent question. So it actually did not reflect negatively on volatility. What it did was reflect negatively on the price. So because demand, as you just rightly said, could be met, prices were dropping because the supply was available at that point. So the prices kept climbing and climbing, of course, for natural demand, but also because there was a potential for supply shortage. So because of the basic laws of, supply and demand, you must have a certain price for me to buy something. And then if I'm not willing to pay that price, then I'm not buying it. So what we were seeing was a continuous rise in the price because that was the only price available. If you wanted to buy nat gas, that was the only choice. With an excess in demand, the price gets pulled back slightly more because now there is more to choose from, if that makes sense. So let's say, any sort of thing. So there's a pair of shoes that's like limited edition. It's very expensive.
Toilet rolls.
Sorry?
Or toilet rolls.
or toilet rolls, there's one, or there's, infinite availability. You're not willing to pay that much. But if there's only one, or if there's, 10, then you're willing to pay more. So when somebody announces that they're going to introduce a more supply of something, that reflects negatively on the price, which is what we're seeing here. But, you can see these huge moves on the hourly chart. So there was quite some volatility, granted mostly in one direction. But interestingly enough, the move after a pullback of 15%, which is not insignificant, stopped basically at this level once again, which was acted as a price reaction area in the past. So excellent question. I can see there was a slight a misunderstanding there, but yes, basically what you saw was correct. So we saw the increase in supply available and increased pressure on prices.
Thanks, Walid. Do we have any questions at all, guys, today? We've had some very good questions so far. I like the fact everyone's just shouted out. This is exactly what Trading Club is about. So yeah, if there's anything, guys, please do let us know. We're here to help.
Yeah, so as Reed said, thank you to everybody who's asked question already. If you have any more questions or any doubts about what we talked about today or anything else, any other market that might interest you, this is what we're here for. I think we're going to be going on for just a few more minutes here, so get your questions in. If you enjoyed the video, feel free to like the video and subscribe to the channel for more of this kind of content. And yeah, let's see if we have a few more questions, and then maybe we can call it a day. It is getting quite late here in the UK, so let's see. There's also a slight delay, so I understand that sometimes if we do ask something, it might not be an immediate response. So, but besides that, yes, of course, if anybody has any questions relating to any markets we talked about today or any other markets that might interest you, we can take a look at the charts. We can go back to the slides or just take a look at something else. And again, as Reed said earlier, follow the news section. Then you'll find plenty of useful resources, the educational section as well, and the market analysis section, which I think is underrated on the platform. Not used as much as other things, but yeah.
We do have a question, Walid, from Shaf. Thanks, Shaf. He asked, what impact will the hurricanes potentially have on the market and the closure of the Hong Kong stock market?
So hurricanes are something that we run into seasonally. They tend to have an impact depending on where they impact. So if hurricanes generally have they end up impacting the Gulf areas of America, so the Gulf of Mexico area, where there's a lot of oil drilling, there's a lot of oil facilities. Hurricanes impact as well other parts of the world where they could lead to flooding, they could lead to damages, they could lead to several unexpected delays or impacts on production. So as soon as that happens, we could see basically if there is a hurricane that ends up impacting some oil production, that would then impact stocks, as we mentioned at the beginning of the webinar, because they're all tied together. If we have a hurricane that impacts coal mines or gold mines or something like that, we could then go have an impact or see an impact on those markets. So it really is always tied to the market that is most impacted by that, the natural disaster. So whether it's a hurricane or not, that is what usually gets affected. Is the primary source of production get affected? This could also apply to, as I said, conflict somewhere in the Middle East. You can assume higher oil prices. Similar situation with hurricanes shutting down oil production in the US, leading to supply shortages, leading to uncertainty, leading to potentially higher prices. So as you can see, it's really a cycle of factors, price. The oil producers do play a part in that, where they can decide to increase production if there is a deficit somewhere, but unreliable, I would say. But yeah, thank you for your question. It's an excellent question, as I said. It really ties into the fact that hurricanes or any sort of natural disaster, any sort of impact, has then a chain reaction on markets because of it.
Thanks, Walid. I hope that answered your question. your question, Shaf.
Thank
Yeah,
you for your
guys,
question.
before we wrap it up, do we have any more questions at all? Okay, I think we'll give it another minute, Walid, and if there's no more questions, I think we should wrap it up.
Okay, that's fine. That's perfect. I'm just taking a look at some charts in the meantime just to see what's happening. I see the US dollar index testing some important levels right now. As you can see, previous high. If we go on the daily chart, let's see how this looks. Yeah, basically we're at the highest level since September of 2020.
Yeah, sorry to interrupt, Walid. We do have another question.
Of course.
So I would like to know which side of the market is mostly affected by the tapering?
Excellent question. So for those of you who don't know, just to clarify a quick recap, tapering is the act of reducing quantitative easing. So, quantitative easing is the amount of cash injection that the central bank allows into the markets. A reduction of that would be tapering. So the main impact of that is less cash in the economy. We've seen, based on the the past couple of years, since a year and a half since the pandemic, a lot of the cash that came into the economies ended up going into stocks rather than production. Some of it went into crypto, some of it went into other things, but really a large part of it went into stocks, particularly in the S&P and particularly in the US 100. Because if you look at the weighting of the indices, you'll see that an index like the US 100 or the US 500, the S&P or the US 100 are really weighted, skewed heavily towards the most weighted members of it. So for example, the S&P is not like each 500 of the 500 companies has the same impact on the movement of the index. So when you see the S&P moving up and down, it's not because each company has the same weighting. It's because certain companies end up dragging most of it. So if you were to remove from the S&P, let's say the top 10 companies, the situation would be extremely different. And NASDAQ is a similar situation because it's the tech stocks. So tech stocks saw a boom after the pandemic because we were locked in. Tech boomed, but also because a lot of the money, as I said, went into stocks. So tapering could then not only impact the dollar prospects or whichever economy you're mentioning, because the primary economy, or the primary currency of the economy, so if whatever central bank. So if we have tapering, it could end up impacting positively the currency, but then paradoxically, negatively all stock markets, or at least stock markets in that region, especially the ones that were most benefited from the money in the first place. So whichever, you have to go and look at it in reverse. Which markets benefited the most from the money that was introduced from quantitative easing, and when that is removed, which ones will be impacted the most? So some of the ones that were most benefited were tech stocks, because obviously so many people were investing in them through that. And on that front, we not only tech stocks, but of course the dollar. If we're talking about the Fed, I'm limiting it to the Fed at the moment, just to keep it a little bit more simple. But yes, so tech stocks, in particular, all stocks, in a general sense, and of course the currency itself, because tapering reduces the amount of liquidity in the market, therefore, in theory, revaluing slightly the currency. Now, an interest rate adjustment would also be required for more push on that end, but tapering in itself would then probably mostly impact stocks, I would say. Thank you for that question, and thank you to everybody who's been with us.
Yeah, thanks, guys.
Questions. We really do enjoy doing these videos and webinars and content for you to provide this service and be able to interact with our customers. And sometimes people might think they have a simple question, but it really is an important question for them. So I really and I can say, Reed, as well, we really appreciate you asking them, and we really do enjoy trying to answer them in the best way possible and providing this service for you.
Okay, we do have a question from Hussam. So for all this shortage in factories and oil, are we going to see a rally in gold?
Well, I mean, I don't predict the future, let's say, but it is a good question. So it's not, so gold is a specific asset because gold is interesting. Traditionally speaking, this could have a webinar on its own about this, but let's keep it short for this argument's sake. So gold in itself is an asset that, you know, like many other things or like many other commodities, you know, you have to keep an eye on supply and demand for that. But also it has this extra role, as actually two extra roles. One is a safe haven, as it's called. So it's something that investors tend to buy into when they feel uncertainty in markets, when they feel, you know, stock markets dropping. Traditionally speaking, the safe haven was gold, maybe the yen, Swiss franc, the dollar sometimes tends to act as that as well. So that's the key. But at the moment, what we are seeing, especially over the last few years, is that gold has really started to lose its safe haven status, to where before it was more likely that, you know, if you saw a pullback in the stock market, you would see a jump from gold. But at the moment, really, we're seeing a lot of uncertainty on that end. In addition, because I think partly is because the stock market is doing so well, but I think the advent of alternative investment resources as well, that a lot of people have been going to, whether it's just buying stocks themselves or buying ETFs or buying, it's a lot more accessible to invest now. People before, you know, you would have to buy gold. It wasn't as common for most people to buy stocks or to invest in the stock market, let alone CFD trading or cryptos or whatever they're doing. So all these things are providing, you know, counter incentives for people who trade gold. So gold isn't necessarily going to benefit by default because of these things. Of course, we could see some benefit from gold. We could see some moves. Let's take a look at the chart actually as we're speaking here. So gold really has been hovering in this area of about 1760. Yeah, you can see a lot of volatility, but limited to this range, which is significant. It's about, you know, 1.5% up and down. You can even see these kinds of candles that you get where like it shoots up and then pulls all the way back down. This was, I think, if I'm not mistaken, after the NFP. And yeah, I think so. Or around that time, basically. So we are seeing, I like to have the Ichimoku cloud on the gold chart. It helps me identify roughly some supports, resistances. Potentially, you can see that the price tends to hold quite well, whether below or above it. But yeah, so I don't think that necessarily, going back to the question, they will translate into a rally in gold, because gold has so many different other factors affecting it as well. Let alone the central bank policies that we could have another whole discussion about.
Thanks, Walid. We do have a question from Philip. Thanks for your question, Philip. So he's asked, do you think a bigger drop in the S&P will happen?
Well,
so, I think I think he's speaking on the behalf of US indexes as a whole. So the top ones, Dow, Nasdaq, S&P.
Yeah. Well, I mean, I don't want to give us a straight answer in the sense of like yes or no, because obviously, you know, we can't predict the future. It is, and even if there is a bigger drop, it could be like this. You know, you can see a drop like this where it stops at a level and pulls back slightly. Potentially speaking, it really ties into what we were talking about earlier with the tapering question, where if liquidity is removed from money is removed from the markets, the stocks that were pumped by those will pull back. If you see like economic decline, perhaps which is actually, that's an excellent point, where if you continue to see shortages, if you continue to see really troubles affecting the day-to-day consumption, the day-to-day production, distribution, logistics, all of that could in itself then impact also the markets. So there's several risk factors for markets at the moment. This is the best way to put it, I think, is risk factors rather than certainties. So there are certain things that are risky for the markets at the moment and worth keeping an eye on if they do happen and how they could impact the markets. So obviously the oil or whatever energy supply shortage, that's number one. We have the Evergrande situation in China, which could lead to a domino effect across markets of defaulting because they can never pay their debt. And number three is the tapering central bank issues. So of course, the rise in demand hopefully will continue with the coming out of the pandemic. But assuming that the central banks will have to act at some point, and when they do decide to act, that is going to be another risk factor for indices, particularly U.S. indices, because we've shown this in the past where if you compare US and European indices, particularly Southern European indices like the French index or the Spanish or the Italian index, you'll see that the recovery after the pandemic was a lot slower than the US indices. So what you would normally consider a more natural recovery. Yeah, and we've talked about this on other webinars. If you are a little bit more interested, you can check out our webinars in the past, the trading clubs we've done, where I talk about more of the stock market in itself. These factors still apply, and they're risk factors that you can see moving forward. So keep an eye on those, and you could see some more moves in these markets because of these things, not necessarily just the technical aspects.
Yeah, we have some really great videos on the stock market in our educational section on the platform. So I would definitely recommend to check those out, because there's we've done a couple of courses and past webinars before. So yeah, again, webinar wise, again, get in contact with your account manager. I'll have a look for you. But in terms of the educational section, yeah, double check. We had a really good course available. You should be able to find it in the education section.
Perfect. Well, I think it's 7. We might want to end it here. I think we've had a lot of questions. So
yeah, it's really good. Really good. Yeah, so guys, do we have any final questions before we wrap this up?
Yeah, and feel free to close it out whenever you want. After that, I'll be happy to answer.
Obviously, don't forget, guys, you're going to get the recording of this webinar as well. So for charts, slides, etc., you should have everything on file. If there's any kind of additional questions that come to mind after this webinar, again, guys, get in contact with your account manager. We'll always be kind of happy to help.
Thank you very much for joining us. Thank you.
Yeah, thanks everyone for joining. It doesn't look like we have any more questions. So yeah, thanks for coming, guys. Really do appreciate it. As already mentioned, if you need any further assistance, you have our contact details. Please don't be shy. Please get in touch.
Yeah. And again, thank you from me as well. Best of luck with your trading. Hopefully we'll see you at the next event. If you have any topics to suggest for the next one, I'm sure there's going to be events happening throughout the markets. So keep an eye out for the charts, keep an eye out for the news section, and we'll see you both, or we'll see you at the next one. Thank you very much and good luck with your trading.
Thanks, guys.